few months back, I made a video titled "The Third Stage of the Housing Market Crash is Here." And I have been waiting to make the follow-up on this video. And well, today is the day, guys. And the fourth stage of the housing market crash is finally here, and I have proof. And just to recap, and you can go back and watch that video if you'd like, I'll link it in the description below. But here are the four stages of a housing market crash. And this was according to a research firm that I cited in the first video. So if you want more information on that, check out the first video. But the stages go like this. The first stage of the housing market crash is a weakness in housing market sentiment. Well, we've seen that from everyone, from sellers saying it's not a good time to sell, from buyers saying it's not a good time to buy, from builders saying it's not a good time to build. So across the board, we have achieved that. The second stage is the measure of buyer traffic going down. And I have some stats I'm going to share on that a little bit later in this video, but we are also seeing way less mortgage applications. We're seeing much less people going to open houses. We're seeing much less offers getting written on properties. Everything across the board, we're seeing less of it. And the third stage is all other indicators of the housing market starting to go down, such as the amount of pending sales, the amount of mortgage applications, everything related to the market. And the fourth and very final stage of the housing market crash is, you guessed it, home prices coming down. And a little bit ago I said I have proof of this, and I do. I'll put up the chart on the screen. This is data according to Redfin. During the peak of this year, of 2022, median sold home prices were $392,000. Fast forward to today, in October, the median sold home price is now $367,000. And this is national data. I encourage you to go check your local market, because I know there are some markets where this data will not hold up and prices are still going up, guys. That is a fact, and I am not going to deny that. I'm not just somebody saying, oh, the market's going to crash everywhere, I don't care what anybody else says. No, because I'm a real estate agent. I realize that housing market data is local, but we're talking nationwide. On average, the median sold price has gone down 6.3% just in a few months, guys. We're talking from June till now. So about 4 months, it's down 6%. So that's significant, and I believe this is going to be the trend that's going to continue through the rest of the year and well into next year, like we talked about in my recent housing market prediction video. Just like the video title says, this signals that the housing market crash is here. It's official, guys. It's actually happening. We don't need to look any further than the actual data of where home prices are at and where they're going to determine we are starting to see this crash beginning. Now, because it's the beginning, there's a lot of confusion out there on, what everything means. And I saw this comment a couple days ago, and they said, Michael, you're predicting home prices will come down 20% in a year from now, but they went up 50% over the past couple years, so prices are still up 30%. How is that a buyer's market? So these are the type of things that need to be understood by anyone who could potentially be in the market to buy a home, guys. So first of all, let's define what a buyer's market is, okay? It has nothing to do with how much home prices fall or what the price to buy is, okay? A buyer's market simply just means that we have 6 months or more of active inventory on the market for sale, and that the buying conditions are more favorable for buyers and allows you to have more negotiating power in the transaction with the seller. And there's a perfect example out there right now of what a buyer's market looks like. If you look at San Francisco, California, it is the #1 buyer's market in the country right now. And that's proof right there. That has nothing to do with pricing, guys, because it's also one of the most expensive places in the entire country to buy real estate. But what a buyer's market means is that the number of active listings right now in San Francisco is around 6,000 listings a month they have over there. And at the start of the year, they only had about 2,000 listings a month. So, and on top of that, the amount of time that it's taking for the homes to sell over there and the amount of price reductions they have to do to sell is increasing tremendously, because the amount of listings that are coming on the market has tripled since the beginning of the year, guys. And to give you a local example here in Miami, so we saw a really bad housing crash here in Miami. Home prices went down 50% during the last housing market crash, okay? And once prices, fell to the level that they did, it's a buyer's market, okay? Because not only are prices low, but one thing that Miami continually had up until recently is an overabundance of inventory, guys. So traditionally, Miami was insane with the amount of inventory we had here. Back during the last housing market crash, I remember when we had about 22 to 24 months of inventory on the market here, okay? A regular average buyer's market is about 6 to 8 months. We had about 22 to 24 months. That's how many condos and homes were for sale here in Miami during that time. And anybody who bought back then and still owns the property today has become rich just from buying real estate, essentially. But that's just part of the story. The other part of the example is, even though since the last crash up until now, prices for homes here in Miami have gone up, they've gone steadily up, it was always a buyer's market here this whole time, guys, because only up until the pandemic brought everybody down here to Florida, we always had an overabundance of inventory here in Miami because they build a ton of new high rises here, and this seems like anywhere you turn around there'd be a crane in the sky. There still are some new developments, but that's pretty much over with now. Even though the prices were steadily on the rise over the past 10, 12 years here, it was still a buyer's market because buyers had an abundance of choices to choose from when it came to which neighborhood they wanted to live in, their budget, what type of property you wanted to get for that budget, all of that, okay? And then when things went bonkers here, essentially, and everyone was moving to Florida, that trend completely reversed. The amount of inventory was really scarce, okay, because a lot of people weren't moving that were living here because they were, happy with the situation here, definitely didn't want to leave Florida. All the newcomers coming in, well, now all that excess inventory is gone. And on top of that, guys, Miami has always been a very international market. We get people from all over the world that buy real estate here, and that just exacerbates the problem when it comes to all the inventory getting bought up in a relatively short amount of time. So the example and the takeaway here is that everybody needs to understand, for those who don't know, a buyer's market simply just means that you have a lot more options than you did before. Prices are probably lower because of that, but there is no definition of where prices should be for it to be a buyer's market, and the fact that you have more bargaining power in the transaction. So that's all a buyer's market means, guys. And we are on our way right now to it becoming a buyer's market nationwide. I don't think we're quite there yet because we don't have the amount of inventory that we need to call this a buyer's market. But like I said in my predictions video, I think the early part of next year, this is going to officially be a buyer's market. But that doesn't mean interest rates are going to be low, and it doesn't mean that prices are going to be at bargain basement prices. So just keep that in mind. We got one for rent here. But you see, some people just never get it. They listed this rental back in January, beginning of 2022, for $22,500, took it off the market in July for a little bit, put it back in August at $17,500. Fast forward to today, it's been listed for 73 days again at the new price. No one's renting it. This is exactly what not to do. Now let's go over some more detailed statistics of why this housing market crash is here. So one of the first things is the amount of time on the market for all the new listings that are coming out has essentially doubled just from this past spring, guys. So it is now taking twice as long to sell a house. And even though that might sound alarming, places are still moving. People are still buying houses, believe it or not. Even with these interest rates and these prices, they are, because listings that are priced properly are still moving in all markets, even expensive buyers markets like San Francisco, for example. Mortgage applications have hit their lowest level that we have seen in 25 years. That is insane. We're talking quarter of a century. That's how long ago mortgage applications were this low, not even during the last housing crash. And when I look at stuff like that, when I see that's how low it is, a 25-year low, and it reaches beyond the last housing crash, it's one indicator that makes me think that this crash could actually end up being worse than the previous one. But that's just a guess, and there's no guarantee of that. But it is an indicator that things could get much worse than we saw in 2008. Sellers, you have to get ready to have your property listed for several months probably for the place to sell. That's going to be the new reality and the new normal for many of you. And not only that, but get ready to offer some concessions to buyers, like buying down their mortgage rate, for example, or paying for home repairs that they ask to be done, or just accepting a lower price that they're willing to pay, because put yourself in their shoes. The prices are extremely high still, and so are the interest rates that just make the payments basically unaffordable. So anyone that's coming to look at your house right now, if you're a seller and you have someone on the hook that can actually afford your house, I wouldn't be messing around. I would be, making a fair deal with them, even if it means selling for a below asking price and giving a few concessions, paying for some closing costs. At the end of the day, you're getting out of the property at a much higher price than you probably paid for it, and that's still a win in my book. Fewer people now are searching for homes for sale on Google. Just a week ago, October 15th, those searches were down 32% from a year ago, guys. So that's a tremendous drop in the amount of people potentially looking to buy a home right now. The Redfin Home Buyer Demand Index, which is something proprietary to Redfin, which measures the amount of requests they get for home tours and other home buying services, that's down 31%. And that's the lowest level that it's been down to since May of 2020. Home tours are down 25%. Pending home sales are down 32%. Active listings, meaning the amount of homes available on the market, are up 5% from 1 year ago. So that's a lot, guys. 5% doesn't sound like a lot, but when you're talking 5% of several hundred thousand, it adds up to being a lot. And like we said earlier, this is just the beginning of this housing crash, so you can expect that number to continue to rise into next year. Wow, check this out, guys. Last time I walked over this way and I shared this view with you guys, there used to be a house right here behind me. Now it's completely gone. I think maybe the last time I was over here was just a couple months ago. It's so crazy how fast things can change when you're not really paying attention, But there used to be this old house right here, and now it's just an empty lot. This is what I don't like though, you see? They're pumping all this water out into the bay, and it doesn't look too pretty. I'm not sure what's up with this water or where it's coming from. If it's just storm water. Maybe it's water coming from the lot next door, because I see a bunch of standing water there. I don't know. Despite that, this is an extremely beautiful view. Now the list of data continues that confirms this housing market crash, guys. About 7.9% of homes for sale had a price cut over the past few months. So the amount of homes that have price cuts in general is going up. The final sale to list price ratio, meaning how much people were asking versus how much it actually sold for, went down to 98.9%, and a year ago it was at 100.5%. So that's still really good. That's what I want people to understand, especially for sellers, because a lot of sellers might hear about this housing crash and think it's the end of the world for them. And I really don't think it is, guys, because a lot of sellers probably bought, several years ago, and you're still sitting on a ton of equity. So that really works in your favor. And one thing that we can look at to confirm that sellers are still sitting in a pretty good position despite all of this is that 30% of homes sold above the final list price, which is down from 44% a year ago, and 35% of homes that came on the market had an offer accepted within just 2 weeks. So, I remember working as an agent prior to the pandemic. Even when you had a really good price listing, it could take a month to sell, guys. By the time you get everybody through there, looking at the property, and collecting offers and stuff like that. If it sold faster than that, it was pretty rare, but a month at minimum usually. And listings that were not priced properly took anywhere between 3 to 6 months to sell all the time. That was just normal before everything went haywire. I think that's what we're going to be back to in 2023 and probably 2024. You're going to see more homes just take longer to sell, and ultimately, that's one of the reasons I think that we're going to see more and more inventory continue to pile up, because places are just not going to move like they did over the past couple of years. So both buyers and sellers are going to have to be realistic in this changing market. You know, this is great news if you're a buyer, especially just from the point of view of having more choices, even though it sucks to pay a higher interest rate, you know. But if you really want to buy and you find something great, and the house that used to be $400,000 is now $320,000 next year, I mean, that's not bad, right? I'm sure a lot of people would probably still go for that who have been just anxious to buy. Here's another sign that the housing crash is here. Home builders, okay, are starting to complete a ton of properties. There's something around the neighborhood of 1 million to 1.2 million homes that are being built right now that are going to be coming to market over the next year or so. And as more of these homes come to market, this is going to flood the housing market with inventory, guys. And what the builders are doing, just like we talked about a couple times, is they're going to be offering concessions in the form of the rate buy downs that we talked about. They might even offer you a lower price, or maybe they'll offer you a bunch of free upgrades to the home, you know, nice new appliances, you know, granite countertops, stainless steel, everything, all of that stuff. You're going to see them start to offer all different types of incentives just to get you into the property. And you know, this is actually going to bring prices down a lot, I believe, because builders have the incentive to unload these properties as quickly as possible as soon as they're ready. Even before they're ready, they want to get them sold. And that's similar to like a home flipper, that the longer they hold on to it, the more money they lose. And so people who are trying to resell their current existing home that they live in now are going to be competing with these new homes coming to market. And you know, from a lot of buyers' perspective, unless you have an amazing location or the house is just completely done to the nines, you know, it might be more appealing for a buyer in your area to look at a brand new home versus your home that's 40 years old and needs work. So imagine what that's going to do to the price, guys. All of these things to me add up to the fact that the housing market crash is here. It has just begun, and get ready for a wild ride, because it's going to be an interesting 2023, that's for sure. Another thing we can look at is the amount of closed sales happening all over the country. I have a regional breakdown for you here, and it goes something like this. If we look at the Northeast, from September 2021 to September 2022, the amount of homes sold is down 18.7%. If we look in the Midwest, from the same time period, the amount of homes sold is down 19.7%, guys. In the South, we have the amount of closed sales down from a year ago, 24%, guys. That's huge, but that's not even the worst of it. In fact, the Western United States is getting hit the hardest, it looks like, with this housing crash, just by looking at these numbers too. From September to 2021 to September 2022, the amount of home sales is down 31%, guys. That is a tremendous decrease in the amount of closed sales. And one thing that a lot of people who argue against what I'm saying here will look at and say, "But Michael, the median prices are still up year over year from back in 2021 till now," which is true, guys, they are. But only now, you know, this year, the later part of this year, are we starting to see that starting to reverse, because like we talked about earlier, nationwide, the median sold price is down 6.3%. So it just start to hit that curve, you know, the top price, and now it's starting to go down. The housing crash is not instant like the stock market. You know, the stock market can go down 800 points in one day or whatever, but the real estate market just doesn't move that fast, guys. It never does. I believe that this is probably the fastest housing market crash we've ever seen, just looking at 6% decrease in just a few months like that. You know, because during the last crash, we saw lower increments. We're talking 1% or less per month of housing prices going down over several years. So 6% in just a few months is a lot, historically speaking. And so I think this is just going to continue well into next year, and probably a year from now, we're going to see the median home price sold even lower than it is today. That's pretty much a guarantee at this rate. And if it doesn't happen, I will be completely stunned, guys, and I'll be the first to say, you know, it's not happening, because, you know, there is the wild card out there of the Fed. It's really all eyes on the Fed. If they go back to printing money and to lowering interest rates again, it will be game over and essentially be, you know, a race to the top. Buy a house as quickly as you can, no matter what, because it's going to go up in price if they keep playing these games. But let's see, right? We don't know. We don't know what they're going to do. Right now, they keep saying they're going to continue with the rate hikes at least through the beginning of next year. I think they probably will. And this is just going to continue to crush the market even more and make this housing market crash more of a reality. If you made it this far in the video, you're going to want to turn on the bell notification below this video. That way you guys are always alerted every time I put out a new upload. And if you don't want to wait for the new one, check out my video from yesterday right over here, and I'll see you in the next one.